computer got it. Okay, what I wanted to show you, let me get rid of some of these charts and stuff down here. And what I wanted to show you today, we're going to open up a commodity. Somebody give me a market. I don't care what market it is. Type in the chat box. Hi, Chuck. Feeders. Give me a month. Hey, Tom. Let's go to May. All right, we got May feeders. Now then, I'm going to open up another one. Open up another one. I'm going to start out with monthly. All right, and then I'm going to go, I'll open up weekly. All right, now then, let's start with going from the top down. Let's go from a monthly. Let me open this a little bit. Whoa, interesting. Interesting. Look at the zigzag tool. So what we're going to do is take a look for patterns, for support, some resistance and things off a monthly calendar, which is looking really strong here. It's come down and hit the zigzag tool. Let me refresh that, just make sure that it's correct. Now it's jumped up after recalibrating, which is even better. Because we trade this in a long position. There's a whole bunch of money in that. Probably 20 grand. Yeah, there's 20 grand in that. All right. So let's go over and take a look. And we've got, well, let's do this. Let's draw out some support here. Well, it didn't hit this support down in here, so it'd have a little bit of a ways to go down before it would hit this down in here. We had a big move, actually, 4 grand. Let's go into a weekly. Zigzag tool, recalibrate. Looking good. So the monthly is telling us to be long on the zigzag tool anyway. The weekly is telling us that we should be long. Indicators on a weekly are telling us to get long. CCI is starting to turn up. That's a bullish, and RSI is flat. All right. Hold on, let me get a view. There we go. All right. Let's go in here and take all this over. So we've got the monthly and the weekly that are telling us that we should take a long position. Well, the monthly is not. Indicators aren't. Zigzag is. Slow stochastic's not. RSI is. So we got conflicts on the monthly. Do we have conflicts on the weekly? Not really. We've got buy signals on slow stochastics crossing over here. Weekly coming back down a little bit. Let's go over and take a look at a daily. All right, daily. Let me recalibrate zigzag because I really like that tool. Okay. We got slow stochastics being overbought. CCI came back down and headed back up. So if anything, I would be looking for this to head back up. Monthly and weekly are telling us it should head back up. Now the daily, we've got a bottom, an internal bottom blip. We looked at this morning during the webinar. Feeders came down hard and then came back up. So that was a very good day for the bulls, even though that it didn't climb higher. The bears couldn't take it. So I'd be looking at, if anything, getting into a long position, but I don't know if I'd do that yet. Especially in a market that's got downside, huge downside to it. Now we could play that with an option, but the daily, the monthly, and the weeklies, if we carried those over, so back, look at them again. All right, we've got let's look at some Fibonacci retracements here. Zigzag tells us that this move from here to here made a 67%. And we know that moves typically make 50 to 62%. And as you can see, it came back down here and it made 67%. So that's okay. That's not horrible. 62%, it's back up. I'll bet it's at the 62. You can put this back up here. Oops. Come here, Fib. Put this back up here. There it is. Price is currently at the 62. But the indicators haven't turned back up. But that's at least positive. For me, it would be on a buy on a monthly. And then again, we're looking at the weeklies, and they're looking okay. The dailies. Let's see what we need to do on seasonals. So if we got anything showing up on seasonals here. Seasonals. Well, I can do one better than that. I can go and then open up Evernote. All right, here we go. April season, May seasonals, cattle, feeders, bullish, beginning May the 24th. So it's a little bit early. But May the 24th, a week away, it's supposed to turn bullish. How long is that supposed to be bullish? Close this so I don't get emails popping in. Through June the 17th, 1, 2, 3, 4, 5 years. Not huge drawdowns. One losing year. The calendar I haven't put in here because it's not close enough. But let's say that we wanted to take a bullish position on this. Look at this, 62%. And there's still some people out there that say, that'll tell you that Fibonacci doesn't really matter. It came back down to a 62%, and then came right off that. The only thing that I don't like are the indicators, slow stochastics. I'm going to put up a momentum, and I want to see if momentum's going up or down. Momentum's going, well, it's going down. Went back up a little bit today, for what that's worth. Okay, let's look at default moving averages or bullish. They have crossed over. I'm going to remove those. So we've got a lot more telling us to buy that than having us not to buy it. So the monthlies are looking bullish, the weeklies. So I'm thinking the dailies are looking bullish. So if we were to use this, let's even drill down a little bit further. Let's go down to a 60. Now we know the market's already closed. And it went flat for the last 4 hours. Let's look at a 30. See how much money we've got from the 30. Still $1,500 away. Let's go to range 20 and see what it's doing. There we go. So if we wanted to take a bullish position on that, we could actually do an intercept order on it. If there anyone in the room doesn't know what an intercept order is, type it in the chat box. Say, I don't know. Because we've been going over them on the webinar during the day. Chuck, are you at home? Wave if you're at home. Say hi. You're at home. Everybody be envious. What a nice office, huh? We should all have an office that nice. All right, not sure. All right, an intercept order you can use. Let's use this here. This is bulls and bears. Let's take off bulls and bears just to remove it so you can see it pop up. Bulls and bears is the indicator that turns the candles red or green or yellow if it's neutral. Turn it back on and you can see bulls and bears come back into here. All right, and then we've got on the bulls and bears, you can click over here and you can put displayed as red, bullish and bears, bulls and bears blue light. I've got it on Dodger blue as an X box. That's what this is. So what this is telling you is that as far as bulls and bears is concerned, you should still be bullish this market, but it's getting really close to being hit. So you can't use it as an intercept order for unless you wanted to short it, which I don't want to short. But an intercept order, I could show you what it would be. I can't place an order because the market's closed. But an intercept order would be, let's say we wanted to use the X box, which is the parabolic czar. As you can see, parabolic czar started back here when the market started going down. It went from being over here below the market, telling you to be long, and then when it flipped, it told you to be short that market. And it kept telling you to be short that market all the way over into here, and then when it hit this area here, then it flipped and it told you to be long that market. And it's still telling you to be long that market as of right now. So I can't really use an intercept on it because it'd have to be up above it. I could use an intercept order if I wanted to short it, and I'll just show you what that would be if you wanted to use an intercept order. We'll find a market we can play with here in a minute. All right, but an intercept order, you would have an order. You would say place an order. Let me see if it'll even let me do it. Now, bear in mind, this would be a sell intercept, and I don't want to sell this market, but the market's closed, it doesn't matter. It won't let me. But I would have a sell order trailing the parabolic czar. So when price came down and crossed over the parabolic czar, that order to be short would be filled. And every bar that goes up, and we're on a range 20 here, so every new bar that we get, parabolic czar will move up, and it'll move up, and it'll move up, and move up until it's crossed. And as soon as price crosses that, then that order to be short will kick in. And then you can place your stops and your limits anywhere that you want to. All right, so it's not going to work for us on a range 20. Let me try a range 40. And see if that might work. I don't think so. No, it's even worse. We can drill down to a range 5. There we go. Now we could use it on a range 5. Now that's a really fast market. Are you anybody not familiar with what a range chart is? Just type in, I don't know, or tell me. But what this is, a range chart, all it is saying that you can set the range. Right now we've got a range 5. So every 5 ticks, or and the tick is 1250, you'll get a new bar. So every $62.50 worth of price movement, you get a new bar. Now here we could place an order, an intercept order, if the market was open, where we could come in. Now we know we want to get long based on the weeklies, dailies, and monthlies. And you place an intercept order to either intercept the parabolic czar or the blue light. And so as price goes up or price goes down, the parabolic ZAR and the blue light will also go down until the price is intercepted. And as soon as it's intercepted, it's going to buy that market. So let's go in and look at a market that's still open. And we'll just play around with, let's go, well, we'll use June, right? And then I'm going to drill down into a, let's say a 30-minute. Let's go back down into a, well, we'll do a 1 minute so we can actually place the trade. All right, here we go. Now, would you want to be long or short that market? Be long that market, all right? Here's parabolic ZAR, just flipped from here down in here. This is a 1 minute chart up to here. So let's place an intercept order here, and we're going to buy one, and we're going to trail the parabolic ZAR. Then I'm going to use limits, and we'll move those. We'll adjust those in just a minute. Right? And so right now, I've got an order to buy one based on the parabolic ZAR. So as price moves, parabolic ZAR is going to move. And when it crosses, it's going to buy that market. All right, let's go over and look at a daily and see where our stops, and we could always adjust our stops and everything else. All right, so I would not want to stop here. That's a big stop, that's 1700, it's too much. So I would use another chart. I would go back into maybe a 60-minute. And I'd move a stop up. That's still 1500. Let's look at a 30-minute. What have we got here? We got 375 bucks here. On a parabolic. Let's put it down here. Say we've got 1100 bucks for a stop. If you go back and look at your daily, what it's showing you here is that you've got an entry order on a 1 minute chart trailing the parabolic ZAR. All right. So as soon as that crosses, you're going to be long the market, and your stop is going to be down here, and your limit you can put in where you wanted to. I put a limit and put it up to here. So we've got $1,100 on the downside, which will change, and we've got say 1,600 on the upside. Now you could drag those and put them in where you wanted to. You could change your stops. You could go back in and on 30-minute chart and move the stop anywhere you wanted to. But what I was going to want to happen here is for this order to get filled on a 1 minute, which it doesn't look like it's going to yet or anytime soon. Because once it does, then what I was going to show you how to do is to trail your stops based on a parabolic or a blue light. Because if this parabolic here, price crosses this and we get long, then parabolic is going to move down here somewhere. Then you can trail your stop on the parabolic ZAR, and it will continue to go up and up and up and up. And we've done that on some of the orders. Now, I may have to reconnect them because my power went off. But on some of the live ones this morning, I think we did that. What did we do that on? Copper, yen, copper. I think we did that on the copper. And since my power went off, I have to go back in and put my stops back on. Let me see what my trade alert that went out today said. Make seasonal trades, copper today. Break above resistance on a 60-minute, stop is trailing the parabolic ZAR on a 60. Good example. All right, so let me go back to a 60-minute or go to a 60-minute chart here, right? And now watch this jump. I couldn't tell it to do this until the order was filled. But now then, I had an alarm going off on my phone, I'm sorry. All right, now then, let's edit that order, and let's tell it to trail our stop based on the blue light. So let's go in here and say trail blue light. Now watch your stop jump. Come on and jump. You don't close until 4 o'clock. You should jump here in a minute. But your stop should jump up into here. So instead of a $612 risk on that, we got long here, and our risk will go down to about 300. Then it'll go less than that, and it'll go up less than that, and less than that, and less than that, until we get positive. And then once it turns positive, it will start trailing into positive territory. I don't know why this is not jumping. It should. Take it back off and move it a little bit closer and see if that will help. Come here, order. Let's trail it on blue light. Let's switch over and try parabolic ZAR, see if that flips. It should flip back up here right in the middle of parabolic ZAR. So we'd have about a $300 risk. And this morning when we put that on, we had more of a risk. And then we got filled, and parabolic ZAR has gone up and blue light's gone back up. But that's how you can enter an order on an intercept order, and after you're filled, you can run your stops and trail your stops using any indicator that you want to, really. I like blue light, and I like the parabolic ZAR for a trailing stop. They seem to work pretty well. Now, let's see where zigzag here is telling us that price should go. Ooh, well, that's not good, because the parabolic ZAR is telling us that price could come back, should come back down to here. It probably will at some time, which is not good. It wasn't there this morning. But anyway, that's how you can trail your stop on a parabolic ZAR or a zigzag. And since I'm getting this, if I wanted to go in and scalp and say, okay, let's try to scalp 400, I've moved my limit down to here. Then I've got a scalping situation where I've got less than a $300 risk down in here for a $400 gain. But you don't really have to do that. Let me show you why. Because if we're trailing our stop, it doesn't matter where our limit is. Go back over and grab it off the daily. Because the daily is saying it should come up to here. All right. Now then on the 60-minute, we're trailing our stop using the parabolic ZAR or the zigzag. So we'll probably get stopped out on the zigzag tool, or no, I'm sorry, on the parabolic ZAR before our limit order is hit. So you could even trade if you wanted to without a limit, but you don't. That's kind of foolhardy. But you could use the trailing stop just to get you out of that trade any time that it crosses back over, and it will continue to move. Does anybody not understand or not follow what I just said? Yeah, I'm sorry. It's closed right now. That's why it won't move. I was looking at my clock saying it's still open. Well, it's 4:30 Eastern, and I'm looking at 3:30 Central. Right. So that's closed. So it won't jump, but it will jump as soon as the market's open again. All right. Did anybody not follow that? PSR better than the blue light? I can't tell you which is better than the other one. Now you could go over and turn it on autopilot, and autopilot will tell you which one made more and which one didn't if you turned on autopilot and then count using bulls and bears as a trailing stop, or use the parabolic as a trailing stop. But I really don't like to do that. I'd rather kind of eyeball it than the computer telling me which one to use. And they're so close, as you can see right here, they're just overlaid on each other. Now here they were a little bit off, a little bit different. So you could use either one that you want to and be pretty safe. If you want to take more risk, you could use the blue light, and if you want to take less risk, you use parabolic XAR. So that's your stop, that's your exit, that's how you're getting out of that trade, either with or without a profit. It's obvious if it comes in here and stops you out before it gets back as a profitable scenario, it's a loss. And if not, blue light will trail up and trail up and trail up as price goes up. And when it gets to zero, you're in a no-lose situation, right? So that's how we kind of, on feeders, we went from the monthly to the weekly to the daily and then to a range. And we could get in, the same way on a range 5, when that market opened again, all right? So cattle it wasn't a bad example of how to go from a monthly into a weekly and then to a daily. And if you're wanting to get long, just find one of the time frames or range charts that will allow you to use an intercept order. Can anybody tell me why an intercept order might make more sense than just doing a buy at market, buy the market? Because what if you buy the market and the price just drops? At least this way you're making price go in the direction that you want it to before you get filled. All right. Market confirms the direction. That's right. Market confirms the direction. So if it doesn't go in the direction that you want it to, you're not going to get filled on it. All right. Let's look back at our little 1-minute chart and see what's happening over here. Well, parabolic XAR, I think that I don't think it's changing very much. Nothing going on. And that's already, well, that's what I get for doing a late afternoon webinar. The market's closed. Not much activity going on. 4,000 sellers to 2,500 buyers. And we were wanting to get long. Anyway, I was just using that as an example of how to get long using a parabolic or the blue light. And what's the good thing about it? If you long term, if you think that market should turn around, wouldn't you want to get long from down in here somewhere? Come here, chart. And you rather get long from down in here than long from here? Well, that's what that intercept order does. It'll follow it down and follow it down and follow it down and follow it down. And then eventually you will get long on that market, and you'll get long from a better position, right? Let's see what are using monthly, etc., not just daily. Peter, because what I want to do is kind of show you, let's go back to the feeder cattle. And if we wanted to get long feeders, or if we wanted to look at the feeder market, I'd want to see what the monthly chart's telling me, and then what the weekly chart is telling me. Then I want to look at the daily chart, and if I can get all three of those charts telling me that I should be long that market or short that market, it's all holds a lot more uh, credence when everything is in the same direction. Plus, you can go in and you can take support and resistance levels. Here's support, and let's just call it, where is it down in here? Let's call it 132, that's close enough. And you could go back into your daily, and you could even draw out a line down here at 132. And you know here at 132, or approximately, it's close enough. Go over here to properties, pull it down to threes. And now you know that without looking back at the monthly, you've got monthly resistance. Go back to here. I use this for daily, this for weekly, this for monthly. So 3 bars wide are monthly support or resistance. And I use red for support. I use green for resistance. So let's go back over and look at a weekly. Now we've got weekly support. Where's the weekly support? Is it different than the monthly? And how much different is it? Yeah. We've got weekly support here at 137.5. So let's go back over here and put that 137.5 here, 137.5. Wish I could right click and tell it where to put the price, but it won't let me. That's close. And then we change that to, that should be on a 2 because that's my default here. So now on the daily chart, we know that this is monthly support. This is weekly support down in here. And that's also daily support because it came, even though this was the weekly support, it came from the daily. So we've got 2 support levels down in here. Plus we've got zigzag tool. So all these areas down in here are support areas. So you'd have to just kind of pick and choose if you wanted to get long that market, how much risk do you want to take on it? Do you want to go down here and trail it with blue light on a daily? That's still a big risk. That's 3,300. Bringing it down to here is 4,000. Bringing it down here 5,000. Bringing it down here. So you kind of have to look at it and say, how much risk am I willing to take on that market? And then go to the chart. You go to a range chart and set your stops on a range chart, following the parabolic. You could go to a 60-minute, you know, just depending on how much risk you want to take. And then you can trail your stops on whichever one you wanted to. Here's trailing on a parabolic, and you won't take any more. You won't take more than $1,500 worth of risk on that, because as that market moves up, if you did get filled, that risk goes down and down and down and down. All right, so that's the maximum risk that you would take once you were filled on it. All right, Chuck, you're staring at me. Are you following along on this a little bit? Yeah. Okay. You can turn your mic on. I can unmute you here. Let me go to participants, and I can unmute you. Unmute. You can talk, Chuck, and everybody hears you. Talk in your computer mic.
Yeah, I joined via telephone. I was playing with my video camera options. So.
Oh, okay. So you're on your phone. Everybody can hear you. We got some echo coming back, but I'll mute it. All right, I just muted you. So I muted your mic because we had some echoes coming back in. But what's nice about the Zoom room, and you've been in once before, I think, but if you had a chart and you wanted me to look at your chart or something, I can give control. You can give, or I can ask for control of your screen, or show your screen, and then everybody in the room will be looking at your screen and what you're looking at, and then you can sit there and talk and ask questions. And if you wanted to, you could even give me mouse control. So if you had questions on how to do something, I'd actually take over your computer and draw everything out for you. Or not draw well, I could draw out, but show you how to do stuff. It's real good for showing somebody on their own computer how they're doing stuff. All right, well, we're back into all positive territory on the little tray. Nothing major going on today, but it's at least positive. Did we get filled? No, we're not filled on the S&P because it'd be showing if we were. But you can see how it's coming down on that 1 minute while ago. It was up here or wherever and came down and came down and came down. And we will get filled long on this here in a minute. I'll cancel that order. I'm not putting it out as a trade alert or something. It's just playing around showing you how to do it. But we'll get filled here within the next 2 or 3 minutes long on that, probably. If the price drops, Parabolic's going to drop. Or if the price goes up, Parabolic's going to drop. So eventually we're going to get filled on this. And we'll be long. And we just used an intercept order to get long the market. So we'll check back on that one. Let's drill down on another one. Somebody give me another market while we're watching the S&P, see what's going to happen on that. Type in another market. Camilla, how are you doing? Beans. You want July? All right, let's open up some other charts here. Let's go start with a monthly. Pull it into pull up a weekly. And we've got a daily. And then we're going to look at a 60. All right, so let's start with our monthly. Now, obviously, you can't trade a monthly chart, but Tom, you said beans. Would you want to be long or short this market based on that monthly? I'd want to be long that market too. So let's go over here and just use one of our tools real quick. I can't use a bear. I need a bear. I mean a bull. And so I've got to go find a bull indicator because the only one they've got is black. And black on white, it's invisible. So I've got to find a little icon of a bull and it'll let me put it in there and something on my to-do list. But anyway, so we're bullish. I'll just type in we want to be bullish. So when will we be bullish on the monthly? Let's go down and look at the weekly. I think so. Maybe not. We had major resistance here. And it's right at that that weekly resistance. I mean, it broke through it, hasn't closed past it, but there's a ton of resistance in that area. All right. Now, if I were to look at a daily, now daily is let me switch the zigzag, see where it goes. It's telling you to be long that market with the parabolic and the blue light, but it's telling you down here that price should come back down and hit this. Indicators here, slow stochastic, CCI, and RSI are all coming down on beans. What else would you look at? Somebody tell me. What else would you look at? How about seasonal positions? Go back here and let's look at seasonals for May. Beans bullish from May the 20th through June the 10th. Now, if we scroll down, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 years, 9 wins out of 11 years. That looks pretty decent. All right. So if we're doing that, we want to get bullish on the daily, bullish on the monthly. So how are we going to get bullish on that? Let's go back in and look at a shorter time frame, 60-minute. Here. Hey, we just got filled on the S&P. I'll get back to beans in just a second, but I'll show you this. We just got filled on the S&P on the 1-minute chart. And we're down 1 tick. But we did get filled. Parabolic ZAR came down, price came down and intercepted it. And now you could use a 1-minute trailing stop if you wanted to here. All right, but we were using a 30-minute, I think, trailing stop. Let's go back in and change this. Let's trail it to parabolic ZAR. Now that should jump up here in a minute. And our stop will be back up in here. There it is. Now we've got a $300 stop. That will continue to go less and less and less as the market moves. All right. Let's go back down to beans. 60-minute. All right. Well, obviously the market's already closed, so we couldn't do anything on a intercept. But if the market was open, we could place an intercept order here. So if the market continued to come down, that's all right. Our buy stop is going to continue to come down until the market turns around and goes back in the direction that we want. Then we get filled. So what we're looking to do is to get filled at a much better price. Instead of getting long the market here, we're wanting that market to come back down, or as an intercept, we want to get filled at a better price. So that's all we're trying to do on an intercept order, is to get filled at a better price. And if the market drops really hard, we don't get filled. All right. So that's how I would use an intercept order. Now you could even go down if you had to. In this case, we don't have to, but you could go down to a 30-minute chart. You know, if to get a signal up here for a blue light or a parabolic ZAR to be above price. But we don't have to here because on the 60-minute chart, it's already there. All right. Let's go back in here to our S&P and I'll show you a couple of things. Let's go back in here. 1-minute charts, boy, isn't it? All right. Just to show you how to use a jump stop. Does anybody not know what a jump stop is? Okay. A jump stop. Find out where our stops are on this. Where are our stops? All right, we've got stops trailing. Come on, let me pick up the order here. All right, we were trailing parabolic. Now, if we wanted to, we could go back in and let's do this. Let's put a jump in here. And what you would say, if the market moved, let's say 20 ticks in our favor, then we're going to move our stops to break even +2, which will pay for commissions, or +1, right? Then we're going to trail a jump trail behind that now. Then if the market moved another 20 points, it's going to move our stop up 10 points to give us a little bit of breathing room. So now, rather than trailing the parabolic, we're actually trailing the jump stop, but our stop will not move from here until the market's moved in our favor by 20 ticks. And you can change your stops, obviously, anytime you want to. You can go from a parabolic to a jump. You don't have to use the second part of the jump. You could just leave it to break even. Click down here, trail to break even if you wanted to. Anybody have a question on jump stops and how those work? Because those work real well sometimes. I still kind of like using the parabolic, but I know a lot of people like the jump stops, and that's how those work. Questions on jumps? Do you have preferences to when? Yeah, it has a lot to do with risk. You know, how much risk are you willing to take? The first thing you should look at, in my humble opinion, is risk. If you're looking at trading that market, how much risk am I willing to take? And then once you've said how much risk I'm willing to take, then you go back into that chart and you say, okay, chart, you tell me how I can take X dollars of risk on this. If I go to the 30-minute, am I taking X dollars of risk? Well, if you were willing to take a $500 risk, well, if you were in that market, your stop would be there and you'd have about a $300 risk. So define your risk, not your rewards first. Define how much risk you're willing to take on that trade. And then go back in and set your stops up on any time frame that you need. It could be a 30-minute, it could be a range 10 or range 20, it could be a 15-minute, it could be a 5-minute, whatever you want to follow. And then have that set up to meet your risk tolerance. Here, as an example, now we're on a range 20. And if I wanted to change that, I could change that. And now I'm taking about a maximum $700 risk. So if I thought that on the 30-minute, it's too close. In other words, I'm worried about getting stopped out before I make any money. I could change that. And I could say, okay, now then I want to edit that order. And I want to move that from a jump. I'm going to trail the parabolic, or let's trail the blue light on the 30-minute, on a range 20, I'm sorry. It'll probably take it a few minutes to jump, but then it'll jump down here, and I'd be taking a risk of $900. Now, as the market moves up or down, that risk is going to go down. And it'll go down again, go down again, go down again, go down again, until eventually one of two things happen. I get into positive territory, and it locks it in with break even or profitable trade. That's what's nice about the trailing stops, I think. Now it should jump on this here in a minute. Oops. So anyway, that's how you would use a trailing stop if you wanted to take a little bit more risk, if a $700 risk was acceptable to you. Or you could go back into the 30-minute. Come on, why isn't this moving? Trail blue light. It should jump down to here. It may take it a bar for it to do it. But you can first define how much risk you're willing to take, and then find one of the charts that will give you that much risk and see if you feel comfortable with it. Okay. Let's see other questions. S&P, yeah, S&P is closed. That's why it's not going to move. But my wall clock's about 2 minutes slow. So the S&P is closed now. But that's how you can go in and take a big picture look at the market on a monthly, and then a weekly, and then go into the daily, and then drill down into a 60-minute or a 30-minute or a range 20 or whatever, to find an intercept order, and then find a chart that or a time frame that will give you the risk on that trade that you're willing to take. So first thing I think you should look at is how much risk you're willing to take. All right. Any other questions? We've been going for an hour. Any other questions on doing this? I'm going to leave the S&P up. We're at break even on it. We're doing great. But that's the way, Chuck, we entered the other orders this morning, other than the options. We used an intercept order on copper to get into that one, and back here we entered on the wheat trade on an intercept order as well. That makes sense to you, Chuck? You can wave, yeah? Yeah, okay. Have you ever used anything like that before? No? Okay. And the charts coming through and sound quality coming through and everything good for you? Good deal. Muy bueno, as we'd say in Panama. Muy bueno, muy bueno. Very good. All right. Any other questions somebody wants to type in? What kind of fancy camera you got there? Who you talking to me or Chuck? Chuck, yeah, Chuck's got a nice camera. I don't know what it is. I'll have to turn his audio on. Hold on. All right, Chuck, you're live. People can hear you. Well, he's got his mic turned off or phone turned off. So I'm gonna.
I had muted my.
Whoops. Yeah, we hear you. Yeah, you're through your phone.
Yeah,
through. Yeah.
I have a Logitech camera or video camera that I haven't used in a couple of years. So I just plugged it in and it's working, but I don't know.
Yeah, it makes you look. It makes you look about 15 years younger. I need one of those. So anyway, any questions on anything we've gone over? No?
None for me.
Okay. Well, I'm going to end the meeting. I'm sorry that I had a confusion starting. I think I'm still on my cell phone data here. Yep, I'm still connected to my cell phone. I wonder if, see if I can connect to this, get off my cell phone data. I guess I'm connected to that now. I think that I am. All right. All right, I'm going to end the meeting. I will see everybody tomorrow. And if you have any questions on something, let me know. And again, I apologize. We were thrown a curve with the power going out about 10 minutes before the webinar. All right.